Welcome to the Deep Dive. We're your hosts digging into the earnings calls that matter. Today, we're tackling Teradyne Inc., ticker TER. They're big in automated test equipment, AEE, and robotics. Their Q2 2025 call definitely made waves. The stock jumped, nearly 19% that day?
Yeah, a huge move. It wasn't just, a decent quarter. The market read something much bigger into it.
Exactly, a real shift in outlook. So let's unpack what got investors so fired up. Okay, so let's kick things off with the top-line numbers for Q2. Revenue came in at $652 million. That was just a fraction above the $651 million consensus. Barely a beat there.
Right, but the non-GAAP EPS, that was 57%, and that comfortably beat the $1.54 people were expecting.
Now, year over year, revenue was down 11%. That's the number that might make you pause.
It might, yeah.
Yeah.
But context is everything here. Despite that decline, the operational side looked really solid, and they generated about $132 million in free cash flow. It's pretty impressive.
Very impressive. So revenue down, but strong cash flow and an earnings beat.
And crucially, a very strong outlook. That combination seemed to hit the mark for investors, hence the big stock jump. It signaled real confidence.
Okay, let's dig a bit deeper into those Q2 financials then. Put some more meat on the bones. Their GAAP gross margin was 57.2%. That was down slightly, about 110 basis points year over year.
Which is, 1.1%? Relatively minor, but yeah, worth noting.
Operating cash flow, though, was strong at $182 million.
And they kept up the capital returns. They bought back $117 million in shares.
Plus $19 million paid out in dividends, so definitely showing financial strength and, giving back to shareholders.
Absolutely. And if you look at the segment mix, semiconductor test is still the giant here. $492 million.
Right, and within that...
System on chip, SoC, that was the bulk of it at $397 million. Then you had memory at $61 million and IST industrial system test at $34 million.
And the other pieces.
Robotics brought in $75 million, and system product test was $85 million. So you can see semi-test dominates.
Which brings us to the core theme of the call, doesn't it? This idea of an AI inflection point.
That was absolutely the headline takeaway. CEO Greg Smith didn't mince words. AI-driven SOX test demand. He called it the strongest growth driver.
And it sounds like their visibility improved dramatically.
Hugely. That was the key. He said just 90 days ago, they didn't have this level of clarity. Now, they expect AI compute and memory to be the majority of their semi-ETS revenue in the second half of this year.
Wow, the majority. That's a massive shift in the pipeline.
It really is. It's not just a hopeful trend anymore. It's translating into visible, expected orders, especially for compute and networking.
And they're backing this up with new tech, right? These UltraEdge AI testers.
Yeah, and they're already getting wins with the big GPU makers. That's critical.
It makes them kind of a gatekeeper, doesn't it, for things like high bandwidth memory HBM and advanced packaging validation.
Exactly. When you're testing the absolute cutting edge, you become essential. It's enabling the whole AI revolution, really.
And speaking of enabling tech, they mentioned the acquisition of Quantify Photonics. What's the angle there?
That's now part of their product test group. It's a strategic play on silicon photonics.
Which is important for?
Super fast data transfer in AI systems. Think optical connections inside servers. It's about positioning for the next wave of AI infrastructure needs. A smart, forward-looking move.
Got it. They also flagged a win in HBM4 testing. Something about post-stack singulated die test. Can you break that down for us?
Sure. So HBM stacks layers of memory chips. Singulated die means testing the individual chip layers after they're cut from the wafer but before they're stacked together. This win means they've found a new point in the process to insert testing, specifically for HBM4.
Why is that important?
It helps catch flaws earlier, which is crucial for these complex, high-performance AI chips where reliability is paramount. It improves quality, reduces later failures, and importantly for Teradyne, it could actually expand their total market opportunity in memory testing.
Right.
It's a new step suppliers might need.
So deepening their position in the really advanced memory tech needed for AI makes sense. Okay, AI is clearly booming for them. But Teradyne also has the robotics segment. How's that side doing? Especially after they reorganize things.
Well, it showed 9% growth quarter over quarter. That's positive. It suggests some stabilization after they merged the sales and service for Universal Robots, UR, and mobile industrial robots, MIR.
So, good news there.
Yes and no. The positive is the growth, and also a big win. They secured a plan of record decision from a major customer. That includes plans for a new U.S. manufacturing site, too, which is interesting from a supply chain perspective.
Okay, that sounds significant.
It is, but it's not expected to really move the needle on revenue in 2025.
Huh.
It's more of a 2026 growth driver.
Ah, okay. And the no part.
The no part is they still don't expect robotics to break even this year.
Why not?
The market conditions, particularly in general industrial and auto, are still, tough. Plus, they have costs from strategic stuff like rolling out a new ERP system, and they're actually cutting headcount to try and improve margins.
So it's still a turnaround story in progress, growing, but facing headwinds and investing.
Exactly. It raises that question. Are they balancing the huge AI opportunity with the resources needed for the robotics turnaround? Something to watch.
Definitely. Okay, quick look at the outlook for the other segments. Mobile.
Demand is kind of modest for the rest of 2025, but they're optimistic about 2026.
Why?
The shift to 2-nanometer chips, gate-all-around designs, more complex packaging, it all means more testing is needed, longer test times, more complex tests.
But paradoxically, mobile might become a smaller piece of the pie.
Yeah, simply because the AI compute part is expected to grow so much faster in 26.
Interesting. And auto industrial.
Still pretty soft, stabilized, but at a low level. There are bright spots like power semis for data centers that connects back to AI, actually. The long-term electrification trend is still the big driver there, but that's more beyond 2025.
And IST, industrial system test.
That one was strong. Revenue more than doubled year over year, mostly driven by testing for hard disk drives, HDDs, and mobile system level test. Kind of a mix of niche areas.
Okay, so that brings us to the Q3 guidance. This seems to be where the market really got excited.
Absolutely. They guided Q3 revenue to between $710 million and $770 million.
And the midpoint of that range.
Comfortably beat what the analysts were expecting. A solid beat on the revenue guide.
And earnings.
Non-GAAP EPS projected at $0.69 to 27 cents. Also strong.
They did mention a higher tax rate in Q3.
Yeah, due to some new tax legislation kicking in, including a catch-up effect. But even with that, the overall guidance was robust.
And management's tone.
That was key. They explicitly said they are significantly more confident than they were 90 days ago.
That phrase carries a lot of weight on these calls.
It really does. You don't see a stock jump almost 19% unless the market believes the narrative has fundamentally changed. The volume was huge too, triple the average.
And lots of call option buying, apparently, especially higher strikes.
Exactly. Classic signs of strong bullish sentiment. Investors clearly bought into the idea that AI compute is going to power much stronger results in the second half, even with caution elsewhere.
It's not just the company saying things are looking up either. There's external validation.
Right. Teradyne stock has crushed the SOXX semi-index over the last 1, 3, and 12 months. Real outperformance.
Plus, Goldman Sachs just added them to their AI conviction list, put a $151 price target on it.
Yeah. The sell side is definitely getting more optimistic too. It fits the broader picture.
Which is?
The whole semi-cap equipment space seems to be in an early upcycle, specifically because of AI. The demand for AI server builds is so strong, it's masking weakness in areas like phones and cars.
And competitors are seeing similar things.
Yeah, folks like Lam Research, Kohu, they're also talking about these AI tailwinds.
Yeah.
It's an industry-wide theme, and Teradyne is right in the thick of it.
So, looking ahead, what are the key things, the catalysts we should keep an eye on for Teradyne?
Okay, a few things. First, September industry conferences, they'll be showing off that UltraEdge platform. Seeing it live could impress more customers.
Makes sense. What else?
Then, obviously, the Q3 results in late October. Will they meet or beat this strong guidance? Could they raise guidance again? That'll be huge. Also, watch for potential news on orders from a second big hyperscaler for AI testers. Rumors suggest maybe in Q4. That would be major validation.
And one more.
Keep an eye on any news about GPS Act export licenses related to China. If restrictions ease, that could open up a significant chunk of demand for compute testers there.
Okay, lots of potential positives, but what about the risks? What could go wrong, or what are investors maybe a bit nervous about?
Good question. The robotics turnaround is definitely one. Will they hit that 15% segment margin target by 2026? Will those ERP costs actually go down as planned? If robotics lags, it could be a drag.
Right. Anything else?
The exact timing of these big AI program ramps. Management seems sure the demand is there, but is it Q4 this year? Q1 next year? A slip in timing could affect near-term numbers, even if the long-term story holds.
And you mentioned some commentary about the EPS guide.
Yeah, some on the buy side noted that while the revenue guide was strong, the EPS guide didn't quite beat by the same margin. It hinted that maybe margins aren't expanding as fast due to mix, or maybe some costs related to headcount.
But the market reaction suggests that was a minor concern.
Clearly, the big picture AI story completely overshadowed any minor quibbles about the EPS leverage for now.
Okay, makes sense. We've covered the call, the context, the outlook. Time for our favorite segment, the not financial advice segment. Let me stress, as always, these are speculative ideas, brainstorming, not recommendations. Do your own research. Investing involves risk.
Disclaimer firmly stated. Okay, trade idea number 1. This one's playing the momentum and the AI narrative. Consider long Teradyne out-of-the-money calls. Maybe something like the December 2025 130 strike calls.
Bold. What's the thinking?
The Q2 call felt like a real turning point. Management's confidence, the AI dominance in the H2 outlook, the UltraEdge wins, the HBM position. It feels like the start of a re-rating as a core AI infrastructure play. The stocks run, the Goldman target, the call volume, it all suggests momentum could continue. OTM calls give you leveraged upside if catalysts like Q3 earnings or new orders hit positively. It's a bet on the AI story accelerating.
Okay, high risk, high potential reward if the thesis plays out. What's idea number 2?
Idea 2 is a pair trade. Long Teradyne, short a leveraged industrial automation peer.
Interesting. Hedging a bit.
Sort of. The rationale is that Teradyne's robotics segment, while growing QOQ, is still facing that tough industrial auto market and isn't breaking even. This highlights a divergence. So you go long Teradyne for its strong AI tailwinds and short an industrial automation company that doesn't have that AI exposure or is maybe more reliant on the weaker auto or general industrial markets.
Capturing the relative strength.
Exactly. It's a way to bet on Teradyne's AI pivot while hedging some of the risk from broader industrial weakness that might affect a pure automation player more. Again, pure speculation, not advice.
Got it. So wrapping things up on Teradyne's Q2.
Yeah, to sum up, the call really painted a picture of a company hitting an inflection point. AI compute is clearly taking the driver's seat, boosting the outlook significantly. Even with the ongoing work in robotics, the core semi-test business, fueled by AI, looks set for strong growth, and the market clearly believes it.
The strong free cash flow and the strategic moves like Quantify Photonics and the HBM wins just add to that positive picture. So the big question for you, the listener, is really about execution.
Exactly. How quickly can Teradyne turn these AI design wins and this improved visibility into sustained high-margin growth? Can they manage the robotics turnaround effectively alongside this AI boom?
That will determine if this re-rating as a structural AI beneficiary really sticks. That's the story we'll be watching. Remember, everything we discussed today is for educational purposes only. It is definitely not financial advice.
We'd love to hear what you think about Teradyne, AI testing. Robotics, get in touch.